Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, markets look set for yet another session, for breather at least. Some solace probably might just creep in. Trends in SGX Nifty indicate a gap up opening for the broader index in India. And US stocks, they rose overnight as central banks somewhat managed to reassure nervous investors. Of course, we've also been talking about the Asian Pacific markets where they've taken a breather from the banking turmoil. And if you talk about the ECB, they've delivered an inflation-fighting 50 basis point rate hike, which is in line with, of course, the repeated guidelines. If you talk about the FIIs, they've been sellers, but if you look at the amount, that has been shrinking a little bit. Foreign institutional investors have sold in shares worth around 282 odd crore, and DIIs have been buying shares yet again to an extent of around 2,050 odd crore. Let us get going and discuss some stocks and strategies with Hemen Kapadia of KR Choksey. We'll be talking about a bunch of IT names out there and defensive, of course, but let's address the levels first. Hemen, good morning.
A very good morning to you, Nickey. Thank you for having me.
Pleasure. Hemen, Nifty managed to eke out gains amidst a volatile and a range-bound session yesterday. What is the strategy for Nifty? More pain or further solace coming in for the markets?
Well, like you sort of hinted, Nickey, I think there is some sort of a relief coming in, some respite. 16,800 has held. We didn't go exactly to 16,800, Nickey, but that has held. Stocks which are important in terms of weightage sentiment-wise, I think Reliance seems to have taken a breather at 2,200. I think Reliance would hold 2,200. If that is the case, Reliance would bounce back and the market sentiment itself, weightage-wise and sentiment-wise, would stage a recovery. And everything is deeply oversold. You see just some minor technical green shoots. Currently, it's probably restricted to early and too early charts, Nickey. But maybe a Sun Pharma, maybe the UBL, some of the pharma stocks looking like giving a bounce back. IT is deeply oversold. And yes, and even Reliance and some of the auto stocks are deeply oversold. Some are at weekly support levels. So everything seems to indicate a move. We closed at 16,985. 17,200 seems like a distinct possibility in a couple of trading sessions. If we sustain above that, I think then we would be looking at something further in terms of an upside. Dow Jones has recovered. NASDAQ is sort of staging a comeback. So frankly speaking, everything seems to suggest, yes, a small bounce is there. I'm saying small. Above 17,200, if we sustain, then that's where things start looking to get better. Nickey.
All right. I mean, also a strong rebound came in by financials, which helped essentially, most of the indices to kind of close a little positive on Thursday. What's your strategy on Bank Nifty? Do you think Bank Nifty witnessed maybe some buying from the lower levels on the weekly expiry? Or you think the undertone is still kind of bearish at this point of time?
Well, frankly speaking, your question sort of answered your question. One, the undertone, like you very clearly pointed out, is still bearish. But yes, a small reversal definitely. On technical parameters, we've seen an upward key reversal come in yesterday, Nickey, which to translate it in simple language, there's a reversal of sorts. Now, if we cross yesterday's high today, which we most probably will in the opening itself, then we see a further upside coming in. Bank Nifty has fallen down for almost 6 or 7 trading sessions in a row, Nickey. So support, oversold, early to early chart showing some positivity. So yes, even Bank Nifty, 39,425 is spot resistance. Above that, we should do well. And 38,855 is support. That needs to hold, which it probably will. So about 39,425, expect 40,074.
All right. Hemen, also word coming in on the TCS, right? Because we are expected TCS along with a bunch of IT names to kind of dominate the discussions in today's trade, given that the CEO has resigned and it's a big upper level reject that we're looking at for IT. Overall, IT TCS per se, how does it look like? And 3 ideas that could be a profitable bet for our traders right now.
Well, frankly speaking, this is going to be a sentiment buster, Nickey. I mean, TCS is huge, it's a conglomerate. So obviously they would be having systems and setups and inheritance in place in terms of corporate hierarchy, but something like this at this point in time is going to impact it negatively. Yes, a gap down opening is a cinch. Uh, Support comes in at 3150. If that goes, it's a problem. See, IT anyway has been under pressure for some time, Nicky, and that's very apparent. But something like this, at least in the near term, sentiment is going to take a hit. Prices might stabilize after a few trading sessions, but sentiment will take a hit. And yes, in the near term, there will be pain. So IT per se looks wobbly, and Infi will only, TCS will only add to that wobbliness, Nikki.
So what are the top profitable ideas right now, trading ideas that you can suggest to our viewers?
First one is United Breweries. One can buy it at around 1460. This is more of an intraday trading buy. Stop loss 1450. Target 1480. Next stock is Sun Pharma. One can buy Sun Pharma at 968. Stop loss 962. Target 980. And lastly, one can buy Aarti Industries. All of these are intraday trading buys, but just one small caveat. If the market opens up with a big gap, do not chase the gap up, because markets are not in fine fettle that you would chase a gap up and sort of get away with it. And the last trading idea is Aarti Industries. One can buy Aarti Industries at around 520, stop loss 515, target 530. All of them are buy calls, bounces coming in, intraday trading idea. But once again, please do not chase the gap up. I mean, if slightly higher than the opening is fine, but a big gap up in the individual stocks, avoid.
All right, that's the word coming in. Don't chase the gap up opening, if at all, for the market. Looks like it could be a trap coming in for the investors. But let's address the top movers of the day. In bunch of stocks, we'll be addressing, of course, something like defense-related names and, of course, IT names. That is expected to dominate the discussion in today's trade, and also index heavyweight Reliance Industries. Well, for TCS, Rajesh Gopinathan has resigned as the CEO and the managing director. The resignation will be effective from September 15th, of course, and K. Kirthivasan is appointed as the CEO and the managing director in the next financial year. Now, JP Morgan, along with bunch of brokerages, actually given out a view on this one. JP Morgan right now has an underweight rating on the counter, and it suggested that this is a surprising change at the top level in a very uncertain year with slowing momentum. But at the same time, they've also highlighted that Kirti has spent 38 years at TCS, a cross role, and is known to be a dedicated company man that could keep largely strategies unchanged. So this should in some way at least address those concerns around there. There is a rejig happening, but the handover is expected to be smooth. Might expect some underperformance coming in, but more or less, it's the internal person who's going to be taking in the big spot. Hindustan Aeronautics, now that's another one on our list, right? Defense Minister has approved a proposal to procure around 70,000 odd crore of different weapon systems. Now these weapons would be to procure for the Indian Defense Forces, and the deal includes the purchase of 60 UH Marine choppers from HAL. So biggest beneficiary coming out there to an extent of around 32,000 odd crore. So do keep an eye out on this one. Along with that, you can also look at Bharat Forge, which is expected to remain active in trade today. Jefferies has come up with a report on NTPC, and it said that it's actually given a view on the media report which suggests that Malaysia's Petronas could be offering in $460 million for a 28% stake coming in for the renewable energy arm. Now, the deal applies around 12.5 per share for NTPC shareholders after 20% holding company discount versus 6% of market capitalization being at rupees 10.8 per share. RIL is another one on our list. We all know that the stock has taken significant drubbing from the start of the year from the high, but Jefferies has now said that it's maintained a buy and the target price of around 3,100 rupees. The stock is right now at 2,200 rupees. The stock, it says, has corrected around 18% since November. The valuations at this point of time are a discount to the long-term averages. It speaks about the equity right now being at a 22-year low, which makes the current capex cycle way different from the one that the company has witnessed in the last one decade. It sees limited downsides to earning. Also, we'll be looking at IDBI Bank. Now, this one is a Mint exclusive. It says that the center may differ in IDBI Bank's $4 billion privatization plans. There'll also be rejigs, right? Annual rejig, which should be coming in for S&P BSE Bharat 22 index. Apart from that, FTSE All World Cap, All World All Cap index also will be undergoing an annual rejig. And the bunch of stocks that, of course, are expected to be in limelight will be something in the likes of the new age companies, which will be we can expect some inflows coming in from that one. Of course, these adjustments were also reflected yesterday in the dying hours of the trade in anticipation that the rejig will happen today. But of course, this is effective today. So do keep an eye out on something like a Nykaa, or for that matter, even delivery. But overall, we're going to be looking at the trade setup right now and how the markets are expected to fare early in the morning. Given that the global handover seems to be positive, remains to be seen if we can cap those losses. It's been a difficult week for Nifty overall. Yesterday, some breather finally came in, but overall, the undertone, as most of the technical analysts are suggesting right now, and even Hemen for that matter, remains to be bearish. Nifty 50 index. Let's look at how it's doing right now. If you look at something like a global setup, like I indicated, it's encouraging, it's positive. Don't buy in a big gap up. So there is Nifty 50 index out there, 17,120 mark. More than 3/4% of gains coming in for that one. So clearly a positive start, like we anticipated, but remains to be seen if the momentum continues to build up and we end the week on a positive note. So 17,135 mark is what we're looking at. And if you talk about the Bank Nifty index, that also remains to be seen, right? Bank Nifty, well, it's still below that 40,000 mark, but 39,500, flirting around that mark. Almost 1% gains coming in on that one. So clearly Bank Nifty has been lending in some of the support. Like we have seen for the globe, financials have recovered. Our market is no different. Bank Nifty gains with more than or close to 1% out there. All right, also let's look at a different sectoral indices, right? The broader index for that matter. We are looking at the same traction building in even for the broader index, more than 3/4% of the gains out there. Small cap index too, similar momentum seems to be building in for the broader index. So we are seeing as a positive start, Bank Nifty seems to be doing well right early in the trade. IT index, more than 1% gains coming in on that one. That's an encouraging one. And also, if you talk about the auto counter right now, the entire index, that's also faring well in trade. More than 3/4% of the gains coming in on this one. Metal, which had, tossy-turvy trade in the entire week, today is up with gains of more than 1.5% in early trades. If you talk about the defense, again, apart from IT pharma, minuscule slender gains as compared to the other counterparts, but still we are looking at gains coming in even for pharma index for such. FMCG, of course, is doing well. It's 0.3% on this one. So we are pharma, FMCG, IT, entire, the defense pack is up. Defensive rather is up, and the realty index, that's also up with gains of around close to more than 1% out there. If you talk about the market breadth right now, it seems to be positive. Advances 32, declines 18. Okay, that number has changed a little bit, sorry. Market breadth now is more in the favor of advances. 41 stocks advancing against 9 declines out there. So clearly the momentum is favoring in the advances right now. And if you talk about the top gainers and the top losers that we have on Nifty 50 index, just to understand the momentum of the markets, we are expected to see how Adani Enterprises out there, okay. Infosys and HCL Tech, well, it's the other counterparts which are actually doing well, right? And if you also look at more lists coming in, Hindalco is there, GSW Steel, Tata Steel. So IT and metal, that's where the trend and the flavor is right now. Ultratech Cement also is doing well. UPL and Axis Bank too seem to be contributing to the upside. Well, on the Nifty losers, the top 3 losers that we have on the list that you can see on the screen, Eicher Motors, BPCL and Sun Pharma. These are the 3 losers that we have, the top 3 losers. Of course, auto also, Hero Motocorp, TCS now. Do keep an eye out on this one. Market hasn't taken the news quite well. It is seeing some amount of losses coming in. Cipla also, that is one also down and out, but with minuscule, losses per se. But Hemen, quickly come in on this one. A for TCS, B for metal names. What do you make out of it? And are you looking at a real amount of gap up opening, just like you indicated? Is that the case? Is that the trap we are looking at, or you were expecting more optimism out there?
Starting with TCS, Nicky, 3150 support, excuse me, we seem to have taken support there. Things don't look that bad. Obviously, there's a huge volume spike. People would have exited. But I believe the news should get digested in a day or two. So frankly speaking, TCS isn't as bad as I thought it would be. It's okay. We've been off the highs from 30, 35, 80, Nicky. We've been down for, 5 weeks in a row. So not a big surprise, but I believe stability should return soon. The Nifty, the gap up came in like we thought, but if you see, we just slightly off its height. Now, again, the market, okay, the VIX is still 15 and a half. Below 13, we'd be slightly more confident of the market sustaining. But the market structure is we are looking at a recovery, Nicky, not a rally currently. So if in the recovery, if we see a big gap up, chances are the market will try to cover up the gap. Now, in the next couple of hours, if it doesn't cover up the gap completely, I think that would be a sign of strength. And if you don't cover up the gap and start recovering, that is the time one would sort of, take a nibble and, test the waters and see, okay, now maybe I can take an intraday trade. The gap, the Nifty tried to cover up the gap. I mean, the same applies for the Bank Nifty. Bank Nifty tried to cover up the gap, didn't. So there's strength coming in. So not a bad opening, but we come off just a bit, not too much. So I believe on a decline, one can take a contra buy call. The bounce is expected to bounce some more, Nicky.
The bounce is expected to bounce some more there, and we can look at buying in contra call when you expect some dips coming in. When you see some dips coming in for the markets, that's the word coming in from Hemen. But Hemen, also, what do you make out of the entire metal pack? It's up and about in trade, something like a JSW Steel, Tata Steel, Hindalco for that matter. How is that faring right now on charts for you?
Well, frankly speaking, metals and IT have been hammered pretty badly, oversold. Metals were in fact showing some resilience when we saw a sell-off coming in yesterday. So coming back to the stocks that you mentioned, Nicky, Hindalco has virtually fallen off a cliff. Extreme short-term downside does appear limited. Jindal Steel and Bar, I think that is one stock which is showing some resilience. Tata Steel, since it's become a 1 rupee stock, the movement seems to have slowed down. But frankly speaking, having said that, it isn't looking exactly very badly placed. It's okay. So metals, Tata Steel is relatively stable simply because it hasn't done much. JSPL is one of the better moving stocks. Structurally, if you look at the long-term charts, Nicky, let's say monthly charts, metals have gone for a toss and the long-term setup has been spoiled. But near-term, okay, small example. Hindalco has been down more than 20% over the last 9 weeks. Now we're going to take support, we're going to give a bounce back. The bounce back isn't going to sustain, but I think we seem to be a bit overdone for the time being. Currently, there aren't very many positive signals, but after 9 weeks and more than 20% of a downside, I believe we're getting close to support. So that's where we could be seeing some respite coming.
All right, Hemen, we'll leave it at that. Thank you so much for taking out the time and speaking to us as always. All right, let's address the fundamental story of the day. A lot has happened, right? ECB rate hike coming in. You're seeing the SVB crisis, the CS liquidity fallout, the liquidity concerns out there. And of course, yesterday we saw the big change coming in on the IT. To address all of that and more, we have Mayuresh Joshi from William O'Neill Company joining us. Mayuresh, good morning.
Good morning, Nicky. Pleasure to be on your show.
All right, I'm going to start off by what do you make out of the markets right now? There was this, before getting on to a whole heated discussion on the IT sector, I would first want to understand your view on the markets because we did not chat about the CS, the Credit Suisse liquidity concerns, which are far likely to be bigger than, the SVB crisis. Are we underplaying it, or you think markets have now digested that and are now looking forward to more macros and further indicators coming in?
So to that question, Nicky, I think, yes, I think it's a large unknown at this point of time. What kind of a contagion risk will the credit squeeze fall out, and the emergency line that has probably got extended at this juncture, how does the entire scenario play out? The entire relief that the US market saw yesterday was more or less in terms of the bigger banks looking at First Republic, one of the banks which had gone bust, and taking over the entire bank itself. That gave confidence to the markets that the banking system, at least the larger ones, might be strong enough, and that probably seems to be the case. As I've always maintained, if you probably look at the financial structure of our banking and financial services universe, the reporting standards that we probably got, and the expectations in terms of how asset quality pressures have eased off for the system, for the banking system as a whole, below 4% in terms of the asset quality, specifically net NPAs. That gives a very positive sign in terms of how our banking industry is probably shaping up. It's more or less in terms of how these global macros are getting played out. On the point in terms of the bond yield movement itself, what probably happens in terms of expected losses, because the expectation is that the lower quartile banks in the US might have M2M losses of anywhere between 600 to 650 billion dollars. And if you extend that to the middle quartile banks, that can probably go up to 2 trillion. So yes, I think it's a large unknown at this point of time, the extent of damage, the extended credit facility that comes through. At the same time, ECB has carried on with its hiking program, 50 bips hike, which probably brings us back to the table on what the Fed will probably do. And a large expectation is that at least 25 bips is on the card. So if 25 bips is something that the Fed delivers, so the market has probably just stated that. If there are no further skeletons that come out of the banking closet in North America and the European region as well over the next few days till the Fed announces that, even a few days after that, I think the markets might take some respite from that. But it's very fluid at this point of time, Nickey. But in general, I think the Indian banking system is in a far better and healthier shape compared to the rest.
All right, we've spoken enough about the banking sector. Let's address the IT sector. Relatively, from the start of the year, we've seen less dropping coming in on the IT sector. But today is the day when, in light of the entire recessionary scenario across the globe, we're seeing some major rejigs coming in for the IT companies, right? First, you saw Tech Mahindra, which announced that the former Infosys President Mohit Joshi has been appointed as the managing director. And today you have the resignation coming in for TCS CEO and the managing director. How do you look at this? In a difficult environment, when the deals are slowing and the macroeconomic situations are challenging, these rejigs, how do they stack up for you?
So to a certain extent, if you probably look at the rejig that's happened for Tech Mahindra, a very senior guy coming in from Infosys, he led strategy, led business, and therefore I think it's extremely important that the management that probably takes over comes in from a good pedigree that is probably happened with Tech Mahindra. TCS, I think with the kind of press release, and when I was probably looking at the press release wording itself, it looks like a very, very well-planned succession. So I think the market has taken the resignation of the TCS MD pretty well at this juncture. But how the new MD probably shapes up the entire strategic part of TCS is to be seen. When it comes to the mid-cap universe, Nickey, I think many stocks have delivered quite well over the past few weeks. You've seen some element of profit booking happening on a few of these names, including the likes of LTI, Forge as an example. A few outliers within the space obviously has been KPIT. Very strong growth in terms of top line, both in terms of constant currency and dollar revenues. EBITDA margins have been maintained even in a difficult environment over the past few quarters where there were attrition issues, wage hikes, outsourcing costs had increased to 18.5%. And with the new client wins that they've got specifically in terms of software mobility, I think that stock has shown a tremendous amount of resilience and strength. So the way I would look at the sector is the forced slowdown is obviously going to bring an impact in terms of order inflows. With the banking conundrum that we've probably seen for the US and the European markets, which was very, very weak anyways in terms of IT spending, does this mean deferment in spendings as they try to come out of this entire banking crisis? And therefore, I think the corollary effect that you probably got on other sectors as lending will become far more selective in manufacturing, retail. Does that mean that these companies will try and probably put a little bit of a curve in terms of their orders as well? therefore impacting order inflows for the sector as a whole. So my take is that wait and watch for this sector. A few stocks in the mid-cap IT space, as I mentioned, KPIT as an example, have moved significantly higher. Wait for certain pullbacks and certain bases being formed as we look at on the opening trends. I think it's going to be a clear wait and watch for the sector as well.
All right, Mayuresh, what's your assessment right now on overall Z Enterprises? Yesterday, there was a Bloomberg report which suggested that the company is going to be settling in the dues for IndusInd Bank, that minuscule amount that it was supposed to pay for IndusInd Bank. But later in the evening, there was a clarification which said that they're exploring the options, including the settlement, which gives a very gray area out there. How do you look at it? Because I think most of the investor community has been looking for the deal coming in with the Sony. That's going to be the re-rating trigger for Z. And that seems to be an overhang right now on the stock. How do you look at it? And do you expect more volatility creeping in on this one?
Absolutely, you nailed it, Nickey. I think with such fluid information coming through, I think the street probably does not like it. Needs clear information to act onto a stock. And therefore, I think still certain actionables are taken on this issue per se. I think the stock is going to be in a limbo. The second element, obviously, as you rightfully mentioned, if all these obstacles are probably cleared off and the hurdles in terms of getting the merger through with SEBI and the roadblocks thereof are cleared as well. Obviously, I think the synergies that will come through, both in terms of subscriber base, both in terms of their OTT platforms, where a significant amount of investments are going for a lot of these media companies, and therefore improvement in terms of return ratios and the bottom line because of revenue and cost synergies is obviously something that can act as a trigger point. But the third most important aspect is the kind of internals that these companies are posting as well. It's not just Z. If you probably look at numbers of Z, Sun TV, Network 18, the ad revenue growth is probably struggling at this point of time. Obviously, I think this kind of inflationary pressures that we're probably seeing and the Q3 numbers which have probably come out, which are very, very muted for a broad part of the universe as far as the Indian context is concerned, the spending pockets have probably got curtailed. And therefore, I think the ad revenue growth is expected to remain subdued. Subscriber growth is reasonable at this point of time. But again, I think it's the matter of estimation on how these numbers will probably play out with accelerated investments still going on to the OTT platforms, which are not contributing significantly on the EBIT front. So internals and numbers are concerned, I think most of these companies are struggling, might struggle for the next 2 quarters. The trigger for Z might come through as soon as you probably get a positive announcement on these news. And then again, the market will probably look at how the Sony merger will probably work out the dynamics in the near future. But from an immediate perspective, I think all these stocks might struggle as far as their reporting numbers are concerned, even for the company.
All right, that's the word coming in for Z Enterprises. But Mayuresh, let's also chat about the entire defense pack along with the realty index pack, because we've seen significant underperformance coming in on the real estate index too. You think if RBI hypothetically will pause the hikes, the rate hikes, which is anticipated, that could be of any benefit to something like the realty index and how the valuation stacking up thus far? Apart from that, also there are a bunch of orders coming in for the defense space. How do you view that space? So that's 2 questions out there for you.
Absolutely. Let me address the first one. I think on the reality front, RBI, I think, is going to take some cues from the Fed. Obviously, I think the core inflation data that we got ourselves is coming off. It's a tad bit higher than the comfort level that we probably got, the 4 to 6% band. It's a little bit sticky at this point of time. And therefore, I think if you want to maintain the differential between the US 10 and the Indian 10-year, which has shrink quite significantly at this point of time, RBI might want to do a 25 bips at this juncture to probably see how the inflationary impact might cool off with these rate hikes and the pass-through that happens. Having said that, with the rate hikes that have taken place, if you probably look at the base rate structures, they have come around 9.5, 10 odd %. Now, in this scenario, for a real estate borrower, to the extent of 1 crore or above, I think the kind of EMI increases that have happened just in the past 1.5 years have been quite significant. So a lot of fence sitters who are probably going in for new home purchases might just defer their decisions looking at how the rate trajectory is expected to be and expected to continue at least for the next few quarters till we see the interest rates moving on. It is evident, Nicky, in terms of the inventory that is started building up, almost 7 lakh odd units in terms of inventory and building every passing month. You might see lesser of new launches coming through, which means new sales velocity for real estate players coming off to that certain extent as well. And therefore, I think the competition that also comes through specifically for tier 1, tier 2 cities in terms of a lot of redevelopment projects that are going on, that obviously also impacts a lot of these real estate players. The exception to the rule, you might call it, is the premium launched at DLF did and the significant sales that it probably achieved in a matter of a few days or weeks. But I think there are a few outlier projects out there. Leverage remains a big issue for these guys as well. So less leverage companies might do well. But again, I think it's going to be an uphill task in terms of getting borrowers and real estate and getting the inventory cleared off as well. So being very, very selective here. On the defense pack, the orders that can come through find quite significant. You already saw an announcement yesterday. There is huge expectations in terms of the defense spending announced in the budget itself, ensuring reasonable amount of order wins for a lot of players within these spaces. A lot of players have actually done phenomenally well. Players like Hindustan Aeronautics, Massgaon Dock, have done phenomenally well over the past few weeks. They have come off from the all-time highs that they've probably hit, but they've got decent order books. Margins are very, very stable. HAL margins anywhere between 24-25%, return on equity 23-24%. Reasonable order book both in terms of executable order and the expected order inflows that can probably come through, and therefore execution will become the key. So to my expectation, I think a little bit of a late stage base for most of these players. Correction will be a right way to probably play stocks in the space. Stocks like an HAL, a Massgaon need corrections to come through and valuations to grow.
All right, Mayuresh, we'll leave it at that. Thank you so much for taking out the time and speaking to us this morning. We spoke about an entire host of things, right? We spoke about IT, we spoke about real estate index, we spoke about defense stocks per se. So we covered it all for you. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.